Don't do a life settlement unless you've weighed all your options and educated yourself. I know that's a little bit clickbaity, but
in parentheses.
And you know what? I was thinking about that. I was like, oh, that's a little bit off. But in reality, if you were to ask me, should I do a life settlement, and I had to err on the side of common sense and safety and the knowledge that I have, I would say yes. Don't do a life settlement. There are better, smarter ways to make the most out of that policy.
But there are times.
There are times when it makes when it makes sense, or sometimes people just want what they want.
Yeah.
I'm Mark McKay.
And I'm Marcy McKay.
Welcome to Sage Smart Solutions. Please join us weekly to learn new and exciting ways to protect your assets and retire tax-free. All right, Marcy. You know what a life settlement is.
I do.
I know what a life settlement is, but I don't. I realized the other day when I was thinking about this, you used to see commercials all the time for, I think Betty White was a spokesperson for a life settlement company.
Ed McMahon.
And but I didn't know if that was still going on because we cut the cord. We lost our house in a house fire about 5 years ago, and at that point I said, okay, we don't need cable anymore. So I don't know what's on broadcast TV commercials these days. They're not coming through on my YouTube algorithm, but a life settlement is basically where you're able to sell a life insurance policy that you own, that either
Typically
can't afford.
A really big one.
It's easier to sell a really big one.
Okay.
And a lot of times they're
a life insurance policy that someone does not want or need anymore.
So maybe they just don't want to make the premiums on it anymore.
Right.
They can't make the premiums. Or what we'll see, and we saw this in 2001 and we saw it in 2008, is that people who've entered retirement with that Dave Ramsey kind of financial planning of build to this number, and then you've got this access and you've got a 4% distribution rule. Well, when the market goes down 30% and their interest rate accounts are still paying almost nothing, they start looking for, that's when you see a lot of the reverse mortgages start, because people are like, what can I do to generate income? And a life insurance policy is an asset that a person owns and can sell, but it's not always in your best interest unless you have a life-threatening condition. If something's changed since you bought the policy and you just want to get the most cash out of it, then a life settlement is probably worth looking into. But go through an independent advisor who can present your case to 4 different brokers.
Right.
Because if you just call We Buy Life Settlement Policies or WeBuyPolicies.com, I probably should check and see if that's a real thing.
If it is, we don't know. We're just using that as an example,
yeah,
people.
I'm just trying to come up with a fictional name. But if you just call them, guess which offer is going to look best to them. Even if they say they're going to present it to their pool of institutional buyers. Great, go to them, but then let's go to 3 other people and compare it. But let's also look at some of the other options. First of all, just have someone examine your policy. Sometimes you can make some changes within the policy so that it's like reduced paid up. So the cash value in the policy pays the premiums for a time period so that your estate or your beneficiaries, your wife and your children and your church and your, whoever you leave your money to can benefit from that death benefit. But also there are some options out there. We've talked about the SAGE method and using cash value life insurance and a tier 1 asset and safe leverage. And when we go down that road, I require people to watch our Masterclass. The link is below if you'd like to watch it.
40 minutes
40
long.
minutes, very educational. It's interesting. Yeah. But this is the one time when I will say, if you have a policy already and you would like us to take a look at it and say, should I consider a life settlement contract? What are some of my other options? Is this a policy that is worth salvaging, or should I just say cash out, max it? I don't want to give advice on a policy that I've never seen before, but it just when you do the SAGE method, we've shown the value of this asset, that we can take the cash value and use it as collateral. And it's such a secure asset that these institutional level lenders will give us very favorable rates against that cash value and not require outside collateral. Well, guess what we use as collateral? Cash value life insurance policies, which is the thing that you're thinking about getting rid of. So there might be a situation where we could take your policy, give you cash for it, take over the premiums, keep it going, and use it as collateral, and then we are able to go buy policies, on other people, on ourselves, using your policy as collateral to start the whole thing. This is that leveraged cash value life insurance strategy.
That's like a win-win.
Well, and you get to keep the death benefit. You'll when you pass, we'll have to pay off the loans against the policy, but there's still going to be some death benefit for
your heirs.
So you're not just getting rid of that like you would if you just cashed out the policy.
If you're going the life settlement route.
Or even if you're not, if you're just going to cash out your policy,
right.
then they don't get anything. If you go to a life settlement route, then that company gets your death benefit. Well, that's why they're buying it. But
right.
that's also something to consider, and not to be a little here, but with their way, the only way they make money, the life settlement brokers, is if you die. When we use it as collateral and we loan you money against it and we let you retain part of that death benefit, the longer you live, the better our strategy does. So, that's kind of a silly point to make, but
right.
it is.
Well, but it's reality, and it should be.
Or on the other hand, if you have been told that you did not qualify for a life settlement, you're either too young or your policy, let us know. They may have been 100% right, but we have seen some very large cases recently that the 70, 72-year-olds in really good health, when they went the traditional life settlement route, they weren't getting the kind of bids they wanted. But we've started working with some institutional buyers that are making some very aggressive bids on these policies that a lot of people think, okay, I'm either too young or I'm too healthy. And if that's the case, chances are you're better off not doing the life settlement. I just want you to know that there are some institutional buyers out there who will make you an offer.
But that's a perfect example of you don't know if you don't ask.
No, especially on something like this, because I've heard numbers ever since I've been in this industry that $200 billion of that can't be right of permanent life insurance lapses every year, and I've heard it's as high as 90%. I've never seen. I don't know how you back that up with
right.
the so I don't. Data. But any policy that just lapses, that's a win for the insurance company.
Right.
When we do these strategies and we're putting together these big policies using other people's dollars and getting those double-digit returns on that safe Tier 1 asset, one of the downsides of that is that the insurance companies are a little tighter with underwriting because they know that we are probably going to keep this policy for the long term. If you just go out and you're like, oh, I'm a business partner, I want to buy a $5 million policy, they might be a little more lenient because they think, oh, there's a chance he's going to let this thing lapse before he dies. So just educate yourself. If you are interested in learning more about safe strategies to provide tax-free income in retirement, watch the Masterclass, educate yourself, schedule a strategy session. If you would like us to look at a policy you've got,
we're here.
Yeah, schedule the strategy session. You don't have to watch the master class, but if you're thinking about keeping your policy, why not? But just make sure that you're being efficient with it. You don't want to get stuck in something paying premiums for long term if it's not structured correctly for you and your situation today and your situation 5 years from now and your situation 10 years from now. So hit the link below, schedule a strategy session, watch the masterclass. It is
protect your assets and retire tax-free.
Very educational.
Yeah, 40 minutes. Good info.
Please subscribe to our channel and join us weekly, and have a great week.
Thanks.